one of the main reasons why some people that have the privilege of qualifying to buy a house is not buying it is because they don't want to have the pressure of the high monthly payments. In this video, I'm going to show you about a program that you can possibly use to have a much lower payment and finally buy that house. Okay, let's get into it because as you know, we make very quick videos here that can give you a lot of information in a very short amount of time. This program is called 2-1 Buydown. The way it works is that you can have a lower interest rate for the first years of the loan. This is not an adjustable rate loan. After the first years of the loan, after you take advantage of this program, you can continue having a fixed rate. You need to talk to your lender, but this is typically how this program works. Just to give you an example, in today's market, if you're buying a house with an FHA loan, your interest rate would be somewhere around 6.5%. With this program, the 2-1 Buydown, you're gonna have a 2% lower interest rate the first year, a 1% lower interest rate the second year, and the third year, your interest rate is gonna go back to the original rate. That would mean you would have a 4.5% the first year, a 5.5% the second year, and the third year you will go back to 6.5% for the rest of the life of the loan, if you decide to keep it. What's typically needed to take advantage of this program is that you can get some seller credits, you can negotiate with the seller, your real estate agent can negotiate with the seller of the house to get you some credits. Sometimes you don't need to increase the price, sometimes you can increase the price to get some credits and use them for this program. Now I'm gonna give you some examples of monthly payments, okay? I do loans in the 50 states, I'm a loan officer, but I live here in California. So I'm gonna go based on properties here, the prices are high, so we're gonna go based on $850,000. With the minimum down, 3.5% down, the down payment will be $29,750. Now, with a 6.5 rate, we are only talking about the interest and principal. We're not talking about mortgage insurance, property taxes, any HOA or homeowner's insurance, only principal and interest, okay? For that price, with a 6.5% rate, your principal and interest would be $5,184.54 a month. Now, if you get this program, the first year, your rate's gonna be 4.5, your monthly payment's gonna be $4,156.09, again, principal and interest. That's a lot, that's more than $1,000 less than what the original payment would be. Now, again, if you got this program, the second year, the rate would be 5.5%, and your monthly payment would be $4,657.29. Now the third year, you will go back to the 6.5 for the rest of the life of the loan, again, if you decide to keep it. It's up to you. That is how you can save a lot of money on the monthly payment and a lot of pressure. So what are the pros of this program? You can save a lot of money on the monthly payment, a lot of pressure. You can adjust to whatever your job is giving you. Maybe you're gonna raise your income in the next couple of years. This is going to give you time to increase your income. Maybe your business is barely starting to grow faster. Maybe in the next couple of years, you're going to have much more revenue, so you can start feeling more comfortable with a higher payment. Or if the market changes, which most likely it will change, and the rates go down, you can always refinance to a lower interest rate, maybe to the 4.5, maybe to a 5%, we don't know, but you can lower that monthly payment. Maybe you refinance to a conventional loan to get rid of the mortgage insurance. There's always possibilities, but this gives you a lot of opportunities to play with the numbers and adjust your finances. Now, what are the cons? The cons are when you get credits from the seller, instead of using that money to pay for your closing cost, for example, you would use it for the program. That would mean you would need to pay for a closing cost up front. So it's a matter of deciding, because there's also other programs that you can use that are similar. Maybe you can do a 1-0 Buydown. That one lowers the interest rate the first year for 1%, and the second year goes back to the original rate. So there's always possibilities for you to, again, play with the numbers and adjust them to your finances. That's why you need to talk to your lender and see all your options. If this video was helpful, make sure you subscribe to the channel and comment any questions you have. I'll be answering everything. Me and the team are here to help you succeed in the home buying process. See you next time.